Grindrod, it's a freight management and related services group. It has a market cap of 9.2 billion rand. And in March of this year, the group agreed to sell a 50% interest in the Cockett Marine Oil division to Vitol, the largest independent energy trading business in the world. Now, Grindrod has a price to earnings ratio of 13.8. Eugene, this Cockett Marine Oil venture right now that it has with Vitol, it's quite interesting because, of course, they have quite a strong allegiance and alliance that they have going with Vitol at the moment. They formed a JV called Leopard's Tankers. They're hoping to build 4 medium tankers in Korea. That's, of course, in the oil space. What did you make of this kind of news flow around Grindrod?
I think it's a good approach to start entering into more joint ventures. They did a similar story in Mozambique with the harbour, where they brought partners in, same guys. So I like that approach. It's not a big company. It's a nice way to expand and grow. They have changed their business quite aggressively over the past couple of years from just pure tanker business into a more logistics orientated business, and I like the diversification effect that is coming in very slowly. It's an exceptionally difficult business that they are in, with the leads and the lags on stock itself. So yeah, I think it's the correct approach. Try JVs, see how it works, and then expand those partners into other parts of your business.
What are your thoughts on how the diversification and the evolution of Grindrod has worked for the company? Have we started seeing that filtering through into the numbers?
I think so. You know, over time, they've always been very good on their timing in investment in new capacity, whether it's dry bulk cargoes now into tankers. I think that they've done that at the right time. They've added to their fleet when there's not a great demand for that fleet, and I think that's meant that they had added capital cost at the right time. And I really think that over time they're specialists in what they do. They've proved they're good at it. I think they're going to continue that way. I think the diversification they've made into financial services, into banking, Grindrod Bank and so on, is a bit of a diversion. I don't know if that's going to be a winner. It may in time, but I think as far as bulk transport is concerned, as they proved with Richards Bay, they're also good at doing the right capital investment at the right time with the right partners.
A very close up on the website, they mention the fact that they are, of course, very environmentally conscious, and they have to do that because it's a quite environmentally footprint of Grindrod basically is quite high. Do you think that we have to red flag this as a concern going forward in terms of a possible bunker tax that could be implemented? That would really be a tax on shipping emissions. Would this impact a Grindrod?
It may to an extent, but I think also there has to be an awareness that one can't close down this sort of industry. Sure, the tanker industry has got a pretty poor record, just like the oil development industry has a poor record, but accidents will happen. And of course they've got to try to be eliminated. I don't think that it will give them a competitive disadvantage.
Okay, well, I mean, and they still, as you say, they're doing what they do well at the moment. Eugene, is the stock hot or not for you?
The stock is not hot for me. I like their story. I understand their strategy. I like their strategy, and I agree with Ian that their timing, especially 3, 4, 5 years ago, were impeccable. But from a earnings growth perspective, I just don't see sufficient kicker. I see this still as a fairly low average PE stock. I don't want to see this. We need to see the stock trading about 7.5, 8 times earnings before we'll get interested in this kind of business.
And that's pretty low. Your thoughts right now?
Well, you know, as I said earlier, it's very interesting that Remgro has taken a 21% interest in the company. And if we want management expertise long term, that's a great management to follow. So if it's good enough for them, it's good enough for me. I would want to buy it purely on that, apart from the fact that it may be a little bit expensive.
They've obviously looked at the numbers. 20% stake is a substantial chunk, so you're buying the stock, you think it's hot.
Follow the winners. That management team has been a winning team over time. Not wildly exciting, but it's a longer term that counts. That's why I'd like it.